This is a low frequency portfolio. I have a description here for each one of these, and the system name is the first. It's a list of the first 6 systems. These systems can be leased individually or in combination in a low frequency portfolio. I have a report on this on a download on the left of this video. You can see the PDF download for this, so I'm not going to read all of these, but I encourage you to download it and go over it. I'm going to go over some charts now so you can see how each of these strategies works. And I will show you first of all starting out with Cobra. Cobra has 2 different modules, a long and a short module, separated into 2 different windows. So this is really one system, and you will not be long or short simultaneously. You can be long or short simultaneously, but you'll only need be trading one contract at the most on this. So you'll either be long or short or flat. And sometimes when you're flat, both of the long and short module could be flat, or the long module could be long and the short module could be short, which would offset and make you flat on this strategy. So I'm going to show you the long window first. This is the Cobra long entry. Today is October the 12th, 2010, and as you can see, we're about 24 minutes till the close. And you can see we got long here at 680, 680. This strategy has a $310 stop loss and will take 1 trade per day at the most, and so your risk is pretty limited, and it looks to take counter trend moves. Today it's done well. So that is the long module. Here is the short module. It is flat. It's very selective. It only takes about 3 trades a month at the most, and it's limited to 1 trade per day with a $500 stop loss. Let's go back. Here's some of the last couple of trades. You got short here on September the 30th, and on September 28th it had a break-even stop loss. And so that is the short module for the Cobra trades. Next we're going to take a look at Viper 3 E-mini S&P. Here it is. It is a strategy. It is originally derived from Viper strategy that it designed in 2005. And Viper 2 came after Viper, and what we did in Viper 2 was added a profit target and a stop loss and limited it to 1 trade per day. And then in Viper 3, I decided to make the entry a little more specific, so selective. So we have a little bit more selective entry for Viper 3, and so it doesn't trade as much. You can see the last 2 trades were profitable long trades, but it's only taken 1, 2, 3, 4, 5. In 6 days, it's only taken 2 trades, and so it has a maximum of 1 trade per day with a $300 stop loss and a $600 profit target. That's Viper 3. Now let's take a look at Viper E-mini Crude. This can also be traded on the big contract, but you want to double your stop loss because the point value is twice as big. But on the E-mini contract, we have a $350 stop loss, and it takes long only trades. And this is, when you look back, it's done well even in the bearish crude oil market because of the counter trend rallies. And so 1 trade per day in this, $350 stop loss. Next we're going to take a look at EVP2. This is the strategy on the euro currency. EVP stands for electronic volume pattern, and as you can see today we're flat. There's the last 3 trades. We had a long winner, a short winner, and a long loser. And this has a $300 stop loss. It breaks even at $400. Once you have $400 of profit, it sets a break-even stop loss. And then it also has a trailing stop loss that kicks in even later. So it can take multiple trades a day. It's not limited to just one, but the stop loss on this is very tight, $300. And it enters trades between 8 o'clock Central Time and 10 o'clock a.m. Central Time, and then exits by 1 p.m. Central Time. It's a very short day trade range on as far as hours traded. All these strategies, by the way, are day trade strategies. And the last strategy that I'm going to look at that I need to go over for this is the Gapfill rank. So let me find that workspace here. Here's Gapfill rank. It has not taken a trade today either. It is very selective. It only takes 2 or 3 trades a month. It has a profit target of $200 and a stop loss of $500. And let's take a look at some of the trades. There's the last trade on October the 8th. Hit the profit target. This one has a high accuracy rate. It's very selective, and it's 9 out of 10, almost 9 out of 10 trades are winners. And so as you can see, there's some of the trades. There's some more trades. So it's very, very, very selective. The last 7 trades on this have actually been profitable. So 7 winners in a row on this strategy. You want to take a look at the performance summary? We can do that. Here's the performance summary without slippage and commission. We can see here here's the winners. It's a pretty good strategy. It's in my book too, 7 Trading Systems for the S&P Futures. You can see how this works. And this is a video on the low frequency portfolio. Once again, I encourage you to download the PDF that I'm going to be posting there on the left. And you can see a list of all the descriptions and an FAQ. I'll answer some questions more about this strategy so you can take a look at it. And let me know if you have any questions. Contact me. Thanks.